Hello, everybody. My name is Graham Elwood, and you are watching the Bitcoin Vigilante. Ooh, we're changing the name. We put a poll on Twitter. Some people are saying they prefer to be called the Bitcoin Comedian. We're going to just pivot more to talking Bitcoin. We're going to talk politics, but only through the Bitcoin lens. Just talking straight politics in America is just toxic, and it's burnt. I'm burnt out. I'm burnt out on it. And it doesn't seem like it's going to get any better. And whoever gets elected in November, it's just still going to be it's going to be a disaster. Either way, whatever is going to happen. So this, one of the things I have been talking about on this show for 4 years now, since COVID, is that we're due for another collapse. We've had people on the show like Christy I, financial expert. We've had Max Kaiser on the show numerous times. We've had numerous other people saying, and I've been covering different stories saying, a big financial collapse is happening. It seems like it is starting, but the corporate media is not covering it. I had to find this. This was on Twitter. Okay, look at this. Breaking, 2.9 trillion wiped out from stocks this morning due to fears of a global recession, the worst day since 2020 COVID crash. Now, this was like, huh? And I went online to try to find other stories to talk about it. This is the craziest thing. The corporate media is not talking about this. This is on Twitter, and then I'll show you the response on Twitter that this so there's this chart. This is the most important chart in the world today. It's the chart of the Japanese yen. So the Japanese market, it crashed yesterday, right? And it's about 11, 12 hours time difference from the West Coast to Japan, right? Why this happened? For 30 years, Japan has had zero interest on their currency. As a result, for 30 years, investor borrowed yen at no cost and invested globally. They invested in T-bills abroad and a basket of risk assets, including the NASDAQ. For the first time in many a year, the BOJ increased interest rates, that's Bank of Japan, this week by 0.25%. This was almost unprecedented. As a result of the increased interest rates and the signal to the market, investors are now concerned that the money they borrowed for free is no longer free, and therefore they are unwinding their trades and sending the funds back to Japan. The estimated quantum of this trade is over 4 trillion. The only question that remains is how aggressive they will be. But for now, you must keep your eyes on the chart. If it keeps strengthening, risk assets are going to get murdered. This is what's happened right here. Look how it's just crashed, right? So there's this tweet. Then there is this one here. This what this guy said. So I just found this guy. He was in response to the tweet.
I think I know why. Let's start by talking to our good buddy, Fred. If you don't know, Fred is the official website from the Federal Reserve where they publish all kinds of official economic data. And Fred can tell you a lot of things. Like, for example, that US GDP, the total value of all the stuff that the US makes that's real, is going up slowly. And that US debt is skyrocketing. This is not news to anyone that has eyes. I mean, we've all seen the meme of Jerome Powell and his money printer by now. No matter how you slice it, money's just getting printed. They measure the total money in the system in different ways. They call them M1, M2, M3. M1 is a particularly cute chart. M2 includes more theoretical money that's just numbers and other screens. And so that spike in 2020 is not quite as intense because it has more factors involved. But no matter what you look at, the money supply is going to the moon. But you know what else is going to the moon? Derivatives exposure. Again, GDP is on this chart in green because it's not changing at all, really, while derivatives are skyrocketing. Derivative is the financial term for like placing bets that are just arbitrary that we make up ourselves, not like buying a stock and the stock's value goes up because the company's value goes up. Derivatives are people in the financial institutions or just you and me making bets based upon other things. Like I bet JP Morgan stock will be worth this much more on that day. I'll put $1,000 on it. which sounds legit because it's, people make bets, but it allows for huge amounts of leverage in the system. Because JP Morgan stock might go up by $1, but we might have bets that mean that changes our bets by hundreds and hundreds and hundreds of dollars. Although in the real world, we're talking millions and billions of dollars. It's an extremely complex topic, but just so you know what we're talking about here, the top 3 financial institutions in the United States are currently sitting on $50 trillion worth of derivative bets each. This chart is in millions of dollars. So 49 million is $49 trillion. And if you notice their assets column, Goldman Sachs is sitting on $47 trillion of derivatives, and they don't even have $500 billion of actual assets to back up all those bets. Because, when you make a bet, the other side is like, okay, but how do I know you're good for it? And you're like, well, check out my nice car, right? Like the car is your asset that backs up the money that you're promising to pay. So yeah, they're sitting on 100-to-1 leverage right there. And a lot of economists have termed this the everything bubble for good reason. Because as all this money got pumped into the system, it skyrocketed the value of stocks, just all stocks.
So let's just break that down real quick. He just said right now that it's 100-to-1, meaning these derivatives, just to put it into simplistic terms, it's gambling, and they don't have the money to back it up. Meaning for every dollar in basically wagers in these derivatives, there's $100 that aren't backed up, basically. So so if people say, oh, I want my money back, they don't have it, is the short answer, the short, clear answer to put this. They just don't have the money. It's 100-to-1. This is what collapsed the banks in 2008. There's many reasons, but one of the basic ones is fractional reserve lending, right? In the past, 50, 60 years ago, banks would lend out at a rate of maybe 3-to-1. Meaning if they had $1 million in cash in their bank, they would lend out maybe $3 million on top of that. So they started doing 20, 40, 50-to-1, meaning for every $1 million, they were lending out $40 to $50 million. And that was pretty dangerous. That's how we had the collapse, the bubble burst, right? Now this guy is saying 100-to-1. And he's talking about this a year ago. He put this video out today saying, this is what I said. Well, not even a year ago, January 1st. He said, this is the everything bubble, and this is going to get scary. Well, we just had $2.9 trillion wiped out from the markets. So I want to first explain, try to figure out, and we might not know today, it might be too soon to find out exactly why $2.9 trillion got wiped out. And then I want to find out, gee, why isn't the corporate media talking about this? The corporate media is, I'm going to show you. We're going to real time just go on Yahoo and Google, and you're going to see no big outlet is covering this when they should. So let's continue with this guy.
Cryptocurrencies, you name it. But we've also seen huge rises in things like mortgage-backed securities. This is since 2010. These are the things that caused the 2008 housing collapse. Yeah, they're on the up. Oh, and so are student loan asset-backed securities. A security is like a slice of pie where you put a whole bunch of debts or a whole bunch of things into a pool, and you slice it up into little slices, and then you sell pieces of it as investments. A company gets sliced up and they sell shares of the company as stocks. Those are securities. So student loan asset-backed securities means when they take everyone's student loans, put them all that debt into a big pool, then they slice it up into little slices, and then they sell those slices as securities so you can make money off of collective student loan debt. Well, let's be real. You can't make money off of it because you don't know how to do this, but they make money off of it. I think this chart shows the phenomenon a little bit more clearly because it's a new thing. This is what we call financial innovation, folks. Oh, but they're also doing it to your car loans too, obviously, which are at record highs right now. But also consumer credit card debt is also at record highs. And you all already know this shit. We all know that we're fucked. But the point is that right now, everything's fucked all at once. And the stock market's insane pump over the last decade or two. And a huge amount of that value in the market is actually just derivative value of made up money of bets propping everything up with fake money that's not actually real, just making everything look like it's really valuable. Because in the financial world, if everyone's making side bets on Apple going up, that increases Apple's value because everyone's hyped. Apple stock goes up, everyone gets more hyped, they make more side bets that Apple stock will go up. You see what I'm saying there? Just if you hadn't looked closely and read yet, that line says 600 trillion. But some estimates put derivative exposure in the quadrillions, which is a stupid number. And I phrase it that way because we don't actually know the size of the market, because over-the-counter derivatives are not regulated and they have very lenient reporting standards, thanks to a certain guy that we'll talk about in a second. And all of this has been carefully executed by a small set of financial executives and power people who love to act like they don't understand the basics of inflation and the economy, and they just could never have predicted the situation that we find ourselves in, but have convenient resumes of being total stooges for the Federal Reserve, despite now working for the government, because those two organizations are not. Or the chair of the Fed, who is the master of, I just didn't know printing money would cause inflation. Because I'm sure Jerome Powell did not understand the most basic facts about how money works when George H.W. Bush named him Undersecretary of the Treasury in 1992. So to clarify, he went from the private sector working for investment banks to the public sector working for the government, back to the private sector working for the Carlyle Group during the Iraq War. There's no rabbit hole to be done on that whole can of shit. And now back to the public sector in charge of the Federal Reserve. Or is that the private sector? I'm not really clear on that one. And then, of course, the guy that's in charge of regulating the whole thing, Gary Gensler, the chair of the Securities Exchange Commission, which is like the financial regulatory institution of the United States. Well, he worked at Goldman Sachs for 18 years before taking the little revolving door.
This cat, I'm new to this dude. He is singing my song. Oh my goodness. He does what I do on this show. He's just doing it through the Federal Reserve and finances, but just follow the money, connect the dots, get the truth. Oh, Goldman Sachs. We've talked about those guys. I mean, let us just add this to what this gentleman is talking about. This guy is doing really solid work here. This is the thing I talk about so many times, and it's not just banking. It's like Biden's Secretary of Defense was on the board of directors at Raytheon. Goldman Sachs has had people in every presidential cabinet since Reagan. And that's what he's talking about. So again, he did this video January 1st, and he was saying, this is bad. I think it started. I think the collapse has started today. We're $2.9 trillion. He's talking about, hundreds of trillions of dollars. This all gets wiped out. It's one of the reasons why Bitcoin is at like 63,000. And I said this from the jump. I've been saying this for 4 years now. There will be a big financial collapse. When it happens, the Bitcoin price will go down with it in the short run and then cruise back up because no one will have anywhere else to put their money. Right? But this guy is making some wicked sense. He's making some this is the same thing. It's the same thing in the banking. It's the same thing in politics. It's all these people in the private. It shows that we don't have, it's what Chris Hedges said in his book, Death of the Liberal Class. We have had a 4 to 5 decades long corporate coup. He's talking about Jerome Powell was working under Bush Sr. Of course. These guys, these old guys, they go back to the 80s, these creeps. The Carlyle Group, oh my goodness, he's right. The Carlyle Group is a huge rabbit hole if you want to talk about all the awful crap they did in the Iraq War. I mean, just unbelievable. But let's go back to this gentleman's tale that he's telling, which is fantastic.
Into the government, where he's worked for Goldman Sachs ever since, to be clear. But back in the turn of the century, Gensler worked with Lawrence Summers to push for passing the Commodity Futures Modernization Act, which exempted over-the-counter derivatives from regulation. These over-the-counter derivatives that are currently worth hundreds of trillions of dollars of unchecked, Lord knows what kind of leverage. He also did a stellar job of specifically failing to regulate the crypto industry in very suspect-looking ways, going after every legitimate actor except for the dude that broke everything, who totally didn't have weird ties to never mind. In case you didn't know, in the build up to 2008, the big boys knew what was coming because they were the ones inflating that bubble, and they popped it at a very specific time with very specific actions. And they timed it very specifically to bring in our Lord and Savior, Barack Obama, who promised to regulate the banks. And that did not go well. And today, the situation is 10 times worse, and the whole world is 10 times as fucked. And throughout all of history, there's only one thing that solves major economic crises on a global scale. But this time, a global war isn't enough to fix it because it's not just a global economic crisis, it's a currency collapse. And all throughout history, a currency collapse leads to the rise of a new currency. And who have you heard talking an awful lot over the last year about introducing a new kind of currency that's going to make the world a much better place? And if we're being honest, it's looking more and more like in 2024, they're either going to let Trump win or do something really shady to make the election not happen. Because they're actually trying to run 80 whatever year old Biden against him. And what better time to pop the largest financial bubble in all of human history than right before you let Trump have office again? Just think about it.
Wow, he makes up multiple great points. So, and of course, now he made this video in January before Biden has dropped out. And I've been worried that there would be some type of financial collapse that they would then say, oh, let's suspend the election. So I think what I fear happening is this financial collapse happens and then they go, oh, what'll save it is everybody do central banking digital currency. That is, as I've talked about, that's scary because that they can track you. Bitcoin, they can't, you can purchase something with Bitcoin. They can't, they can't do that. And they say, oh, that's why only criminals use it. But let's be clear here. Central banking digital currency, you donate to some, environmental organization. They could say, oh, you're a terrorist. You donated to Jill Stein's campaign. You're a terrorist. And they can come kick down your doors and arrest you, which they could do to me right now. So they're going to try to force a CBDC on us, which another reason I've been saying this from the jump, buy Bitcoin, get it off an exchange, get it on a cold wallet. So there's a long, long time between today, October 2nd, and the election, which I believe is November 5th. Sounds like only 3 months, but look at all the crazy shit that's happened just in the last 20 days. That awful debate where Biden looked out of it. Assassination attempt. Trump is like, numbers go through the roof. The assassination attempt, the RNC, Trump is going through the roof. We have a professional wrestler take his shirt off at a convention. Then Biden steps down. Kamala's numbers are usurping Trump's a little bit. Anything can happen between now and November. And the election getting suspended because we have a massive financial collapse, that absolutely could happen. This is what I say, follow the money, connect the dots, get the truth.